Hello everyone, this is Carlos from Forex and today is May 25th of 2010. Let's get right into today's forecast review. Alright, so the market has been sideways for us right here. I'm going to draw what the market has done so far and you will be the judge. I don't want to become the judge today. Just take a look at what's going on right here. Come on. Tell me, what do you think? Should we as a yes or as a no? Should we trade or should we stand aside? Okay, that's enough. You should know about 3 seconds. It is absolutely a no trade situation. All right, so I hope that by this time you understand that the price action and market activity should dictate the opportunities of our participation on the market. And in this case, we have a total consolidating market. I understand this is a 4-hour chart, and if we take a look at the MACD absolutely it's behaving completely erratic. So I'm not going to participate in this market, and this is my way of creating a very powerful money management system and putting into action. So what I'm going to do within the next 3 or 4 minutes, hopefully, I'm going to explain to you the opportunities that you can find on trending markets and the opportunity that you can find when you stand outside of the market. This is not only happening on the British pound, this is actually happening on many other currencies out there. Yes, you can find other opportunities, but you will also find yourself in a lot of trouble if you do not learn how to stand aside of the market. So I'm going to take the opportunity, since we're not going to be trading, to explain to you in this video as a training video the most important aspects of success, of the success ratio, is a combination of psychology and knowing exactly when to stay outside of the market. So I'm going to go straight to the point. You do not need to get a trade every single day. You do not need to trade every single day. The market, it is not an ATM machine. So I need to make clear this, absolutely clear for you right now. People tend to think that they can make money every day from the market. The potentials are there. You will always have a 50% chance. I understand that, but we're professional traders. We're not gamblers. So you need to learn on how to stand outside of the market, specifically when the market is telling you not to do so. And a very clear scenario is when you go to the 4-hour chart right here, you guys, you understand this is a trending market. Look, I'm going to draw it for you. You see, this is trending market right there. This is not. Okay, this is not a trending market. Got it? We want to be in this type of swings right here. You see, nice swings. We can predict the market movement. We can predict the turnaround points, get on the breakouts of it, or get on the synergy zone area and collect the money, and we're up. In this case, this is a total chaotic situation. We do not want to be in the middle of the sideways markets. So when you find this and you understand that this is exactly a tell you tale that this is a no trending market, then you are absolutely immediately become a professional trader, implementing one of the most important money management techniques ever, which is knowing when to stay outside of the market. So let me just explain to you the difference and the errors that everybody commit in this situation. So this video is actually going to be implemented on the training modules, and it's going to be titled when to stay outside of the market, when to know. Many people tend to do this type of mistakes. I'm watching right now a 15-minute chart. It looks absolutely beautiful as an uptrend market, and we can certainly find an opportunity absolutely to the upside perhaps, and continuation of a probable, I don't know what, third wave up, so to speak. If I'm a short-term trader, this is probably the situation. Now, we got two situations going on. This is not the time to be trading at. And number two, by the time the opening of the market comes in, maybe the whole aspect or the whole scenario will change right here. So many people tend to look at the trades in the wrong time frame. So the first thing that I have taught you to do is immediately go to the 4-hour chart. Let me tell you the secret why. The secret of the reason you should go to the 4-hour chart is just for the fact that those are the actual charts that the most of the market makers actually use to implement their strategy to the long term. And I'm talking about for the next 24 48 hours of their trading. So that's the reason you always see me analyzing the 4-hour charts first, because those are the ones that they tend to push on the levels of those higher time frames. Now many people say, well, this is an opportunity to go long, so I'm gonna go ahead and do so. But if we switch to the 5-minute chart, what's going on? Isn't this supposed to be going up? Right now I can see that the market had a pivot low here. It was taken, let me show you, it was taken right here, and this is another pivot. It was taken right here. Okay, but I got this major low, so from this swing they already corrected all this all together. You see the point here? Now this is kind of a sideways or downward move. You see, by focusing on the wrong time frames and selecting your opportunities on the wrong time frames, because you're absolutely taking a synopsis of the actual market activity in the wrong time frame for your decisions, you can end up in the wrong side of the market without knowing it. Okay, so once again, 5-minute, it looks like that continue, beginning of the downside move. 15-minute, it looks like, whoa, this is a 15-minute. It's actually an upward move, and this could be a second wave up to the upside. Now 30-minute chart, hey, hold on, what is going on? Well, this is like a correction, but now I can see that this high was never higher than this high. So this looks like a double top with the intention of reversing back down. Now the whole aspect of the analysis turn around, and I'm going like, come on, man, I don't know what I should do. This is a major pivot low that it has been taken from these guys, and the market just collapsed. Now they recover all the movement, but they never take out this previous high right here. So that's a fail point or reversal point, and the market is coming back down. So now the idea changes. I got not many thoughts of what should we do about this, right? 1-hour chart, oh come on, let's see. Oh, I can see this is more of a downward move because I can see a higher point here and this one right here. So this is kind of a downward move, and this high is still lower than this one, so this is another kind of a downward move. So everything looks a little bit fishy. But on the other hand, we got this pivot low in here, very important ones, and both of them were taken by the market. But this move was already almost corrected by this one. So can you start to see the point when everything start to like mix up, that you really don't know what decision you should do? Don't try to find a trade where there's none, guys. Don't. Just stay outside of the market. Let me just switch to the 4-hour chart. Oh, I can see what's going on now. These people are having a hard time. This is a war zone right here. Now I can see what's going on. They can't make up their mind. Got it? Oh, okay. So you know what? Let me just do a very, very important idea here. Why don't we just take a horizontal line and mark the high of this channel and mark the low of this channel. And also what I'm going to do, I'm going to measure the width of this channel. And it has a 300 pips, so to speak. You know what? I know as a rule of thumb that on sideways channels, all right, consolidating stages, when the market breaks above it, I don't care if they break above 50 or 60 pips. Don't think that you're missing that trade. Come on, guys. Think you're better than that. If the market breaks, you're not going to lose that trade. Let's say that the market breaks below, or the market came up and break above. All right. So, and I drew the wrong colors right there. Let me just do it again. I want to do it fine. All right. Blue to the upside and red to the downside. All right. I just want to be very specific here. So All right, if they break and they move negative 80 pips, oh man, I lost that position. It was 80 pips that I could have made, perhaps even 100 pips, or even they move 100 pips, I don't know, to the upside. You know, I lost that trade. Oh man, come on. No, you already know that the actual width of this market is plus 300. And as a rule of thumb, this is one of the oldest techniques of the market activity and price pattern behavior. The oldest techniques means that the width of the triangle is going to be break it either up and down, and it's going to be travel on equal movements. Got it? So you're going to have if the market just moved right here 100 pips above, you got still possible 200 pip move. So you just need to sit back, relax, analyze, find, load up the charts, find the synergy zone, and wait for the buy opportunity. And the same thing goes for the downside. Got the point? So in this case, it's 300 pips. You measure the top of the zone, and this case is the channel, and you measure 300 pips to the upside. Let's see, where's that? It's about 48.30. Let me just round that up. 48.30 would be a little bit higher, somewhere in there. All right, you got the point. Let me just do this. It's going to be better. You go to parameters and you type in 30, and it will put the precise number right there. You see it? Perfect. Same thing to the downside. And we go like, okay, if it move 3, it's going to move 300 pips to the downside. Just find that about that, and you just measure that. 307. There you go. It's 303. All right, it's going to be 39. I don't know, 39.18. All right, so we just put that in there. Same thing. Right click, horizontal 39. Let's see, 18. It's a rough guess. All right, so there you go. Now we know we have right here. I'm going to draw this for you guys. It's going to go like so, and you have the zone. It's kind of understanding the zone now that I know you're accustomed to see this. This is a no trading zone now. Got it? It is a no trade zone, guys. It's until we see a break below 42.24 or 45.28, either one of those sides, and the market closes just way below it or way above it. Then, and only then, we will come back, double check that with the MACD pointing out in which favor they're intended to go, and then we're going to go ahead and recalculate the whole thing, find the specific entry point with the synergy zone, find the specific turnaround point with our stop loss in place, knowing that that stop loss it means a couple things. It means that is the most we can risk when we place our buy opportunity or sell opportunity. It is the most that we can risk on that movement, and if they reach it, it's meaning also that they are probably intending to turn around and go the other side. So we already know that, and we also have, and we provide you 3 very highly calculated target prices, and you can compare any one of those target prices now with a 48.30 or the 39.18, depending on which side they're going to take. So can you see the whole blueprint? This is actually how I analyze a market. I go ahead, go on the 4-hour chart, analyze the price pattern behavior, compare them. It's easy for me to see it, I understand, but you just compare it with a trending market. Can you see the difference of a trending market? Look, guys, come on, look. Trending market. Okay, swings, nice swings, and we can participate on those swings. Absolutely great. And oh, this is another drop, nice swing, and all of a sudden consolidating situation. Not good enough. Take this one back. You see, these are trending markets. Down here, look. Stay outside. By this time, I already know you already have a situation going on. Got it? You just wait for the breakout or below, right? And you can measure the width. Let's just do this. Come on. Let's just. I feel that I need to bring this over for to many of you guys out there. Come on, let's just do this. This is absolutely great. Of course, it's easier to see it once it's already gone, but you already know that we can pull this off based on our forecasting power. But hey, we already know where the market is and what's going on with the market. Got it? Oh, we don't know what's going on, so on and so forth. Can you understand that by analyzing the pivot steps in this place, you can measure the width of the triangle, which is one of the oldest tricks. All right, and I don't know why people just don't pay attention to that, but that's 191 pips. And all I'm saying is, once I see a breakout of either one of those trend lines, you see how we measure from, can you see how we select this guys, you see the pivots, and on the future, they held pretty nicely right there. Isn't it amazing? For me, it is. All right. Can you see a break above and a close on the 4-hour chart? Yeah, hey Carlos, I see a break above on the 4-hour chart. Should we buy right there? You know better than that. You know that we come in, we recalculate and go back down to the 30-minute chart or 1-hour chart, find a pullback with a synergy zone in place with high probability to turnaround points, precise levels or areas that I know the market will not go any further down, and we can enter those points. And the closer that we enter on those points, it will mean that the most profit or the most pips you're going to make with the least movement that they make towards the future pricing. So you say, well, all right, I'm just going to wait for Carlos forecasting synergy zone, and we'll enter whatever the synergy zone would mean. But right now, without him telling me, I know how far up they will probably go. Now that I see a break above right there, I can certainly go over here, measure this out. It's a 185, and I can measure 185 to the upside. Let's see if that's true. Just right there, it's gonna be, let's see, a little bit further. All right, there you go. 54.53, so to speak. All right, so let me see, 54.53. Right click, horizontal, 54.53, and okay. Let's see if that's true. What was the width again? Sorry, it's 187, and we measure from that trend line of the breakout 187. Yeah, that's right there. So Carlos says that this is a 4-hour chart. They just clearly indicated a potential upward movement right here by closing out outside. Now we're going to wait for the market to give us a great entry point, and we can just move on. All right, so the market came on. We probably took on the lower time frame a pivot step out. You can see this 4-hour chart coming back down, and that the range of that bar was from 52.75 to 52.43. It's about what, 30 something pips, something like that. So we would probably miss that entry on the synergy, but the pivot step would have got us in. And let's see right now, let's see if we actually will reach the target. Check it out. Come on, check this out. All right, right there, bingo. How much do we pulled in by just waiting precisely on the opportunities? Right there, 187. Was it worth it? Try to find a trade inside this mayhem or this problematic situation? No, come on. Just forget about the past and look what the bright opportunity comes to you when the market tells you is the right moment to get into the trade. You see, this is a very highly calculated plan of attack that you can implement on a daily basis just by waiting for the right moment and understanding that when the market is telling you not to participate, you let it be. That he is the one who dictates, and you're the one who waits for his confirmation to participate in. You have to be friends with the market. You don't have to go against him or try to find something that, it's not going to be there, and you're just going to find yourself in trouble. Now, yes, we can just go ahead and create other bunch of stuff like, well, I can see here this is the first wave up, this is probably a wave 2, this is a third wave up, and so on and so forth, and the market just went up. And can you see this is a third wave up, fourth wave down, fifth wave up. That's the end of it. And look, the market just reversed, and it's probably gonna turn around into the other side, so on and so forth. This is exactly what it did. All right, so you see, I'm just trying to show you exactly when to take the considerations of the market and when to know when to be in the market, when to stay outside of the market. I believe that's the number one killer of the market's trading accounts of many of the traders out there. Not many people understand that by standing aside is the number one and the best money management system ever created right there. I just gave you right there today one of the number one secrets that I haven't even thought about until two of members since December show it to me, saying that, did you notice, Carlos, that since the launch of December, we only had about 1 or 2 losses, perhaps. But if you actually follow through the plan exactly as a synergy zone, waiting for that stop loss being hit, you would have never had a stop or a losing trade yet. I never thought about it because I took trades and I lost a couple of trades because, of course, I change things on my own perspective. I'm a personal, it's my own system, but you know, I change the rules from time to time, and you know what, I get nailed as well. But they show it to me, and if you go back to every single trade and every single situation that is going on based on the synergy zone, enter, not enter, pivot step, so on and so forth, if you follow through the synergy zone and that stop loss level right there on the targets, you would understand that the number one reason that we perhaps had that great track record of not having many losing day, or perhaps, as they say, almost none, it's just for the fact that we always stay outside of the market when the market is actually telling us not to participate in. So today is a no trading market. Stand aside, watch the market as it is, and I hope you really learn how to become a very professional trading, a successful trader, just by understanding when to participate and when to stay outside the market. This is Carlos here from Forex, and I hope you have enjoyed this video very much. Thank you very much, and I'll see you in the next forecast.